Welcome all traders to the InsideTechnician.com. It is now 12:22 p.m. Eastern Standard on December 4th, 2014. Today's video demonstration will provide an illustration of how to cross the bridge from end-of-day analysis after drawing a conclusion as to the current state of the U.S. markets, use that intelligence, and walk right into real time, analyzing the 15-minute charts for a high probability trade setup, and then identifying exactly where to enter that trade and where to get out to lock in a profit once again in real time. The trade that we'll be talking about was identified and taken by the majority of people who've come through the educational system here, short trade that brought in anywhere from 3 to 6 points just this morning. So real quick, let's look at the end-of-day analysis here. You're looking at an end-of-day chart updated in real time. Current prices marked in market are 2070.50. That's 2070 and 50. And the resistance level in red was laid out at 2074, and the downside of the channel is 2050 and 75. Now, where prices couldn't get through on a closing basis, yesterday's 2074 resistance level, along with what we'll demonstrate shortly on the money flow indicators comparisons to these prices, with the lack of volume here, it clearly states that there may be an opportunity for a short trade setup. Now let's look at the price chart pattern. Recent move down, back up, can't trade through resistance, and again, the lack of volume here as compared to the past within this price chart pattern. Getting right into a short-term smart money tracker, we'll take a look at the money flow index. This particular indicator is a 14-period mathematical representation of a formula that specifically tracks the largest institutions, hedge funds, to be able to determine where are these people going in a short period of time. Now, these are the people who have the largest pockets and do move prices from one level to another. They are in control. And our job as a true professional is to identify with when and where they trade and take only the best trades so that we can fade these moves and make a lot of money in a short period of time. Here we have a substantial negative divergence, a marked difference between a relative positive strength of where the smart money was at this point versus just before this move had taken place again today. So higher prices, lower prices, higher indicator level, lower indicator level here. Again, a very strong negative divergence, eliciting the higher probabilities of price movement to the downside, the biases to the downside because of the pent-up selling pressure that has not yet taken place in the form of the price movement. Now, the first move came here, and today's move was anticipated because of our desire to be able to identify with that high probability trade set up the downside, plus use the conclusion from the end of day analysis to be able to make an objective decision here. Only objective trading decisions will put a person on the professional radar screen and keep him or her there for a new career. Next, we want to take a look at just one more indicator within our toolbox that we're using here within this methodology. Very simple. The moving average convergence divergence indicator, lagging indicator, has officially crossed from here to below at this point, and disparity widens as the momentum continues to the downside. Now, this indicates from a lagging perspective that although prices are up, as you can see, the trend has already changed and moving to the downside. So once again, price is trading up on inflated highs, artificial highs, and nothing really to support much more of the movement to the upside based on today's analysis. Now, with this in mind, we have clear levels once again established to the downside that we're looking to get to. And then, as we demonstrated earlier, the current channel that was set up was right here. So a lot of room to go to the downside, a multitude of trades, and at this point right here, clear target between these 2 days as well. So let's get right into the next workspace and look at what I was looking at in real time, and here it is. First, I want to get right into the money flow index, in this case, 14 period, and I want to talk about how we had a trendline violation right here when the floor level on a 15-minute chart that was established at 2071 and 75 was violated. Now, prices had traded up. The blow-off came in to the upside after resistance couldn't get traded through, once again, at 2075 on a close. Turned around and moved to the downside, penetrated the floor level on a 15-minute chart at 2071.75. This is key. Now, at this point, we're going to take a look at the Chaikin money flow, a longer-term smart money tracker, 21 period, and see, although the configuration is different, we have an upsloping trendline violation here and an internal support level that's established by the indicator itself right here that gets penetrated before the floor level is crossed from above to below on a 15-minute chart. Now, bear in mind that we're looking at 15-minute charts, and we know that we have targets set up at 2068.75, 2067.25, and 2065. At this point, it's unclear exactly how far that move will go. But as you can see, based on learning how to establish these levels at key price points, we're half a point short here, just about, from a 2068.75 on a target. An excellent trade. It could have been picked up right away. The key to the Chaikin money flows firing to give us the short signal was not only the trendline violation to the upside, the support level broken, but the actual intersection between these two right here at that value in order to be short. This clearly indicates at this point where the longer-term smart money is going, and the MFI indicator indicated at the same time where the short-term smart money was going. So we have two different indicators with two different calculations and two different parameters, giving us so much case evidence in order to trade short that you'd be hard-pressed not to in the moment. The question becomes, when does the change in trend officially occur? And as you can see, according to the MACD indicator, it was even before the bar crossed from above to below the 15-minute level at 2071 and 75. The cross already took place, as you can see right here. And as we progressed and prices moved down, full downward momentum to take the trade to the short side. Now, as you can see, there were a multitude of opportunities early AM, meaning a multitude of trades could have been taken to profit from the entire move. But these prices never looked back to the upside. No stop would have ever been close to being taken out. And the secondary target, all the way down for the expected move at 2065, was hit right here on the low of the very next 15-minute bar. Out of the price profit target, in order to lock in a profit, depending upon your risk tolerance, the time horizon, for the whole time that you'll trade. Clearly, an excellent move, anywhere from 6 points early this AM. Now, the exact entry came here. Here's your floor level at 2071.50, the match for the 15-minute chart based on the 1-minute prices that were laid out here. Here's your blow off to the upside. Can't close above this level resistance that we saw. Prices turn right back around, and all the smart money volume comes in right here, right here. After the blow off, prices turn back around and finally trade through on a close with a lot of smart money behind them at 2071 and 25 for the preferred fill right here. Trade never ever looked back. No stop was even ever close to being taken out here and all the way down to this point right here. You're talking right below 2065. Now this is the essence of high probability trading. Everything that we do here at the Inside Technician is geared to teach you how to do this every single day as a true professional so that you can up your game. You can become a more profitable trader and take only the best of the best trades that are available to you within this incredibly liquid market, the only market that I trade every day in full time. Now, aside from the walkthrough here today, which clearly demonstrates how to identify what we want to trade, know that the InsideTechnician.com has more real-time recorded profitable trades in the moment as they were taken on the company blog, within our website, under profitable trades, and on YouTube, over 100. No other educational service has that anywhere in the world today. We do it for you. We do it to prove that this methodology is highly profitable and timeless. We'll see you on the next profitable trade.